Alright guys, I am going to walk us through preparing a statement of cash flows and how to prepare a statement of cash flows. And then also wants us to calculate the ending balance of cash and then obviously prepare a statement of cash flows. So that's what we're going to begin. So when doing the statement of cash flows, there's going to be 3 activities we're going to focus on, and those activities are going to be operating activities, and then we have investing activities, and then we also have financing activities, investing or financing. So let's start there. So operating, this is going to be like the day-to-day things to stay running. So from the list of accounts we have, those ones would be cash received from the sale of products to customers would be an operating activity. So we put it under cash inflows right here. So I'm going to put from sale of products to customers. Okay, and that amount is $40,000, so we'll go ahead and put it on the left side for that $40,000. Okay, that was our first operating activity. Our next operating activity is going to be, or should we, you know what, I'll just start from the top and work our way down. So the next one we have is cash received from the bank for a long-term loan. This one is going to be a financing activity. Obviously, as you can see, like we have inflows and outflows on the operating side, but it doesn't have those on the investing and financing. I'm just gonna go ahead and write if it's inflow and or outflow, just as like to, I guess, help you guys see like if it's money coming in or money going out, because also the inflows and outflows tell you if you add the amount or subtract it. So like I said, that is going to be a financing activity. And so since it was cash received, that would obviously be money coming in. So this is also going to be an inflow. Okay, and so down here for financing activities, we're going to do, I'm just going to put bank loan as my, okay, so bank loan, and that amount is going to be for $45,000. So we'll put that over here for that $45,000. All right, up next we have cash paid to purchase new bakery ovens. This is going to be an investing activity. Investing activities are going to be like the long-term purchases, I guess, of the company. So obviously spending $50,000, you're not going to just operate this business for like 6 months and call it done. It's going to be a long-term investment. So with it being a long-term investment, it would be an investing activities, or yeah, an investing activity. With it being cash paid, that tells me that this will be an outflow. Again, it's not asking us to sort them out on the other, or on the investing and financing activities. I'm just going to do it just to show you guys. So I'm going to put, so cash paid to purchase bakery oven. So I'm just put purchase. If you guys have the assignment, it might call it equipment. I'm going to put just purchase ovens / equipment, just because that's might be how you guys see it on the problem or saw it. At least that's how I did. Okay, so purchase ovens equipment. So it's an outflow, so that means we would subtract this amount, and so like I said, the parentheses, that tells us to subtract it. So we'll go ahead to make sure my handwriting looks somewhat decent. But okay, so next we have cash paid to merchandise suppliers. This is going to be an operating activity, and so looking at that word paid tells us that this is an outflow of cash, so meaning we are spending or using our money to pay the suppliers, the merchandise suppliers. So now see, we had the inflows like I said, and now we have the outflows, so we're going to put this one under the outflows since obviously it's money being spent. So I'm just going to put merchandise suppliers right here, put for merchandise suppliers. Okay, and that amount is going to be $12,000, and we do subtract this one as well, so we'll just do $12,000 right there. Okay, so cash received from the sale of an unused building is going to be a investing activity, so that cash received tells us that is a inflow, so we'll just go ahead and put inflow right here. Okay, and cash received from that warehouse we'll do, under investing we'll do from sale of warehouse, or I'm going to just put building, but you might also see it as warehouse. I'll just make a little note of that as well. Okay, there we go. And then that's going to be for $13 that we're going to, this will not be subtracted since it's a sale and we got that money. So next we have cash paid to bakery workers, and this is also going to be an operating outflow since we're paying that money. This is part of that day-to-day. If we're not paying our employees, then we don't have anyone to work and keep our business running. So paid cash to gig workers is going to be an outflow, meaning we're spending our money or using our money to pay our employees. So that is going to be a cash outflow for operating. So I'm going to put for employee salaries, just something like that. Okay. And that amount is going to be $24,000, and we're also going to subtract that. No, I don't like that. So 24,000. There we go. Next up, we have cash paid for advertisement. This is also going to be an operating activity, and that paid word tells us that it's going to be an outflow, right? So we'll do for advertisement, and the advertisement amount is going to be $4,000. So we'll also subtract that. So we'll put that $4,000 like that, indicating that we subtract it. Next up, we have cash received from sale of services to customers. This is also going to be an operating activity. And so looking at that received word tells us that this is going to be an inflow. Okay, so we'll do from the sale of services to customers. Okay, and that amount is going to be $30,000. We're going to add this amount. So we got $30,000 right there. And the last one we have is cash paid for dividend, or cash paid for dividends to stockholders. So go ahead and highlight this on up. And this is going to an out. Just put dividends payment. I don't remember how the problem would or had it written, but so we'll do dividends payment, and that's going to be for $6,000. Okay, and now we have all of these classified. Now we need to figure up totals. And so to do that, I'm going to use a different color for it. So to do that, what we're going to first start by doing is taking this 40,000 and this 30,000. We're going to add them together. Okay, it's going to give us 70,000. Highlight that so you guys can see where that 70,000 came from. Okay, and then next we're going to take our cash outflows and we'll add these ones together as well. And that's going to give us 40,000. And so what we're going to do next, I also want to actually point out this is going to be our revenues or our revenue, and this is our expenses. Okay, to do that, we'll take the 70,000 and subtract it by 40,000. Okay, it's going to give us 30,000. Okay, so we'll go ahead and write 30,000 here. Okay, and so this is going to be our net cash flow from operating activities, which we are not quite done with this number yet, so keep that in mind. Next up, we have to do our investing. So to do that, we're going to take this 50,000 and this 13,000. And since that's, like this over here, this is how I look at it. It's negative 50,000. And then we're going to add 13,000 to it. So we take that negative 50,000 and add 13,000 to it, and that's going to give us negative 37,000. And so we'll take this amount and put it right here. But we're like behind. We owe that much left still. Okay, so that 37,000 is right there. Last one we have is our financing. Let's find a color. So financing, what we'll do is take that 45,000 and the 6,000, and we will subtract them, obviously. So 45,000 minus 6,000 is going to give us 39,000. Okay, take this 39,000 and put it right here. Oh, right there. And we'll put that one right there. So we'll do 39,000. Okay, and then we have this little blank right here, which we need to figure out. And this is going to be a net increase in cash, but it will not always be net increase. It could definitely be net decrease as well. So I'm going to make a note of that. But my practice problem is going to be a net increase in cash. And so what we do to figure that out is we're going to take that 30,000 that I put a box over earlier, so 30,000, and then this negative 37, we're going to subtract, here's 0, and then we'll add this one right here, which is at 39,000. Okay, together, negative 7, so when all that's said and done, it's going to be $32,000. And since that's not a negative, that would obviously be net increase, so let me make a note of that. And so we would put that amount right in there, by the way. So we'll do 32,000. Okay, and the last final things we got to do is this. So we have cash paid at the beginning of the period is $5,000. So you see we got the cash at the beginning of the year. Put that right there. It's going to be 5,000. And then so cash, we got to do this at the end of the year. To do that, we would take our net increase. So we'll take our net increase in cash and add that to cash at the beginning of the year. And so that would be that 32 plus 50. That's going to give us 37,000. Okay, and look right here. And so this amount right here is going to go right there. And then so we'll do 37. And we got one. There's one more spot that we got to put this number. That's going to be right here, where that's where the ending balance of cash. Literally just transfer it right down there. Okay, and that is it. That is how we would do it. So I'm going to just really quick write a note. So we did this already. Well, so we prepared the statement of cash flows, and now we calculated that. So that would make it be complete, and our final answer should be 37,000. So let me know if you guys have any questions.